Inventory looks to be finally climbing for the spring. We had the most new listings this week since September. Nice little increase. That's still 10% fewer listings each week than last year, but at least it looks like the market is loosening up a bit right now. The sales rate is climbing too at a very normal pace, not like spiking, due to the limited supply of homes to buy and worse affordability scenario. The sales pace is running 15 to 20% fewer than last year. It's really a supply constrained market, and we'll get to test that assumption as supply loosens up this over the next few weeks. By the way, we're going to start publishing these weekly videos on our podcast audio feed. So if you prefer to get the data just on the audio, it'll be there for you. If you haven't found the Altos Research Top of Mind podcast, that's where I interview really great guests about their perspective on real estate, the market, the broader economy, the future of this industry. I do a few interviews per month, and so you can find that on the Altos blog or wherever you get your podcast. I'll link to that in the comments below. We are going to start publishing the audio for these market updates on that podcast channel. There'll be episodes available every week if you're a podcast subscriber. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. There's a link in the description below to join us at Altos. I'm Mike Simonsen. I'm the founder of Altos. And let's look at the data, the latest data, as we enter the final week of April 2023. The market saw the most new listings this week in 1 week since September. 80,000 single-family homes hit the market. 21,000 of those went into contract almost immediately. And so we can see that the demand is definitely there for any new supply that we can get right now. You can see the nice spike in the bar at the far right end of this chart that shows the new listings and the immediate sales. A friend shopping for a home in Pennsylvania shared that he toured one home in his price range this week. It had obvious water damage, needed extensive upgrades, and he was shocked to learn that there were 9 offers in 3 days after listing. And so these are the homes that we track with our immediate sales metric. That's the light colored portion of each bar here. And with over 20,000 this week, we had the most immediate sales really since July last year. July, of course, is the peak of the market, and every year, and last year it had the added pressure of dramatically shrinking affordability. So demand fell off quickly in the second half of last year. Now we can see a much more normal seasonal pattern, and the sales in the spring, where we can also see how our limited inventory is holding back more sales from happening. People are basically buying everything that's available. With that bump in new listings, we also had the first real increase in inventory for the year. There are now 414,000 single-family homes on the market across the U.S. That's up 2% from last week. We have 50% more homes on the market than last year at this time, but of course, 50% fewer than 2019. So we've had such a restricted supply market, and I've been talking about how we'd have more sales if we had more supply. So now we get to confirm that statement. As sellers finally start testing this market, we should also see the pending sales climb. I know a lot of folks like to use mortgage purchase applications, the applications, as a proxy for housing demand. And since applications are at low level, they presume demand is too. But we're in a supply constrained market, so the mortgage application rate should climb too with more supply in the coming weeks. I'll be keeping an eye out to see if that assumption proves true. But that's the way it looks right now to me. We still have half as many homes available for sale as what was normal for the last decade. So you can see the dark red line here has had a little bump up this week, but still way below the normal levels. Last year at this time, of course, inventory was climbing 2, 3, 4% per week. This was our first 2% week in 2023. So it looks like we will continue to see inventory start climbing for a couple months now. Our inventory forecast models predict another 2% increase this week. And hopefully some home buyers start getting better options with fewer bidding wars as we roll into the summer. Lots to look for in the inventory chart. And as we finally have some fresh inventory and so many homes are being purchased quickly, we can see that fewer and fewer home sellers need to take a price cut. This week, the percentage of homes on the market with price reductions dropped to 29.4% of the market, almost back under the levels of 2019. Because fresh inventory is coming later this year, and the low point of the price reductions will also come later. It takes a month or two after the new inventory, some of which is overpriced, to get the message. So in May, we'll definitely start seeing the price reductions climbing again. And normally, this time of year, these are homes that got listed in February and March that didn't yet get offers. So then they're the ones who start taking price cuts in April. And then the normal curve is increasing a month or two after the inventory started increasing. But because inventory has been falling, the price cuts, that turn of the price cuts is delayed also. So probably into May or so. The picture we get is one of a much healthier market than we had late last year. Many more home buyers than we had late last year. Fewer, of course, than the beginning, the crazy hot beginning of the year. See the dark red line here? It's still moving lower. And so if you'd asked me at the beginning of this year whether we'd recovered this completely, there's no way I would have guessed it. I guess that tells you whether to trust my guesses for the future. The median price of homes, single-family homes in the U.S. this week is $440,481 this week. That's up 1% from last week. These are not spiking home prices, but this is spring. Prices have stopped the decline that you'll still see in the headlines. The declines are really behind us, and the headlines are just catching up, at least until something else in the economy changes. But they're behind us for now. The median price of the new listings had a healthy jump this week to $415,000, reflecting both the time of year and the demand that the sellers can now see in most markets around the U.S. The price of the new listings is a very forward leading indicator. The homes that get listed today reflect the wisdom that the sellers and listing agents know about the buyer demand locally, and they price to that. So they get listed today, they take offers in May, those sales close in June and July, and then in August we start to hear about that in the headlines. So the new listings is the earliest leading indicator of future home sales prices. And the signals right now are not that bad. Remember, because we have fewer price cuts now, that means the homes that are on the market now are getting the offers at around their list price. That means that the sales prices in the future are not falling. And that's what I mean. This is a message that's very hard for some people to understand. You know, people read the headlines, like the Case-Shiller Index, which look at closed sales prices, and they see the falling trend. So tomorrow, the Case-Shiller Index will be released for February, and it'll include sales data from December and January too. So those were the homes that took price cuts in November. And that was the peak of the price cuts. So the Case-Shiller will be down again tomorrow. And the important thing to note is that the market now is telling us about the sales that will happen in May and June, and they are not under the same price pressure they were back in November, 6 months ago. So we have visibility to those sales that are happening now. The median price of the pendings, the homes that are in contract, it's actually closer to the sale. So it's not leading as far ahead, but the price is closer to the final sales price, even though the sale hasn't actually happened yet. This week, the median price of the pendings ticked up to $379,500. Again, it's spring. Prices climb in the spring. And in the Altos data, we don't do any adjustment. There's no seasonal adjustment. We're simply measuring everything right now. And right now, homes are selling for 1.4% lower price than last year at this time. Last year, the data was still reflecting that massive momentum from the pandemic, the end of the pandemic frenzy. So the price comparisons with last year will continue to get worse over the next couple of months. Last year, the pendings had climbed 8% in price from the start of the year. This year, the pending price has climbed only 5%. So the difference gets worse each week. In this chart, the dark red line is the curve from this year. The light red line is from last year. And you can see how the prices are lower and ticking up. When you're watching for a turn in the market, maybe recession hits or mortgage rates climb again, the pending sales price will be an excellent confirmation of things slowing again. So keep watching this data point. As I mentioned, the sales rate is climbing too. That's a very normal pace of climb. Again, this is not seasonally adjusted due to the limited supply of homes to buy, of course, and of course, less frenzied demand. That crazy demand is gone. The pace of sales is running about 15 to 20% fewer than last year. That's like 1 million fewer home sales in 2023 than the year earlier. It's a significant difference. And again, in this chart, the dark red line is this year. It's climbing for spring, but it's not climbing that quickly. We're supply constrained. There's a cap on how many homes can be purchased right now because they're not for sale. So it'll be really fascinating to watch the pending sales rate after September. That was when we really had a slowdown in last year. And we'll watch to see if the sales rate later in this year exceeds the sales rate of the year earlier. But that's later. Right now, what we can see is that until supply climbs, we'll have limited sales. And supply is climbing a little bit. So maybe we start to see the pending sales get closer to last year's rate. I've been talking national. There are differences in the local markets, of course. If you need to know what's happening in your local market as it happens, go to altosresearch.com and just book a free consult with our team. We'll help you interpret the crazy market for your clients right now, your buyers and sellers. This is a critical time to be properly informed about the market. A lot of people are watching the headlines and they're not aware of what's actually happening in the market right now. So please join us more next week.